What's up, apes? Welcome back to the Daily Pills video stream of the day. My name is David. It is currently 8:33 p.m. on this beautiful Thursday, May 9, 2024. We are talking everything markets to get you ready for the ticker tape tomorrow. Make sure you don't blow up the account like I'm all too used to doing. We're going to be starting off by talking about everything interest rates globally, not just focused on the United States, but we probably will be talking about why the United States is and always has been the greatest country in the world. In the meantime, sorry to anybody that's watching outside of this sea to shining sea. I honestly feel bad for you. Then, speaking of America, we'll be talking about exactly why the United States has suddenly decided to become way more cool about smoking weed. The DEA, the Drug Enforcement Agency over here stateside, have suddenly kind of changed their mind on this. It's a little bit suspicious given that it's an election year, but we'll be talking about exactly what the motivations are and what the outcomes likely will be. Of course, in between those two topics, we'll be talking about some of the hottest stock moves of the day, specifically Airbnb completely fucking over the WSO Alpha portfolio for the day. We'll talk about what should be on your radar for them going forward. Like I said, guys, my name is David. I am currently engrossed in the Celtics game right now because we are playing the Cleveland Cavaliers. It's currently tied about 54-54 with about 11 minutes left in the third quarter. Now, nobody is exactly too worried about the Celtics winning this game. I mean, everybody knows nobody hates Boston sports fans more than, well, all of America hates Boston sports fans, but because we're so good, I mean, hate us because they hate us kind of thing. Nobody hates us more than them from New York because we completely dominate them. We're very close. We have way more championships per capita than they do, so get the fuck out of here. But New York Knicks fans we're seeing outside of MSG chanting, "We want Boston." I mean, if you want the smoke, we'll give it to you. That, it's a huge vote of confidence from the city that hates us so much that we're going to walk through the Cavs, and then we'll probably walk through the Knicks after that. So shout out to the Celtics for that. I mean, big day for the Bruins yesterday. I couldn't care less about the Bruins, to be quite honest. But I'm going to support my team no matter what. Speaking of supporting my team, the WSO Alpha portfolio, we rose about 39 basis points on the day yesterday, and that brings our year-to-date return to about 8.67%. That is underperforming both the NASDAQ and the S&P 500, so please don't remind me. I cry myself to sleep every single night thinking about it. But, you know, we wanted to give them a little bit of a head start. Like I said, guys, we want to keep them on our toes. Just wait until later on in this year when we start to absolutely take off and dominate the S&P like we did last year, and probably underperform the NASDAQ once again, especially fucking Airbnb keeps this bullshit up. Anyway, before I blow an absolute gasket 3 minutes into this video, let me go ahead and break down some of the banana bits for the day. So first and foremost, we have Meta Platforms and Apple completely dominating the market in terms of share buybacks, as if they're not dominating in literally everything that they do anyway. These two companies have announced about just under about $200 billion in total buybacks for fiscal year 2024, $110 billion of which is coming from Apple. I mean, it's a good sign if you're a shareholder that they're just going to give their money right back to you by kind of reducing the float of outstanding shares, but it's also not a great sign that they don't have anywhere else to invest this money. I mean, didn't Meta just get screwed on their last earnings call for pouring like $40 billion into artificial intelligence with nothing to show for it? Why don't they take some of this stock buyback money and do the exact same thing and just keep this machine going? Either way, that's the situation right now. I won't judge them, but what I will judge is Boeing, and that's because this company, for the past 14 years, you know, they've been going through a lot of difficulties. It's a few broken planes, a few whistleblowers shot in the face out of nowhere, but for whatever fucking reason, they're apparently trying to go to space as well. I mean, we have seen evidence, proof over the past couple of weeks that this company cannot build planes that fly from fucking Boston to JFK if they wanted to. I mean, but we're going to let them go to the International Space Station. Shout out to anybody that's unfortunate enough to be on that rocket. I really hope you do make it up there, but I would not trust anything with Boeing. Anyway, moving on to our last banana bit for the day, we have Google. I mean, it's a lot of big tech stuff going on. In case you haven't fucking noticed, it's pretty much all big tech over the past couple of years. Specifically, Google, Alphabet, they just released their AlphaFold 3 model, and this is an absolute breakthrough in the biotechnology world. AlphaFold, when they first released Gen 1, it was already a breakthrough because this thing had the ability to basically predict proteins. Don't ask me what any of this means. I'm reading it off of the screen, but apparently that's huge in biotechnology because basically suggests that we could, it's supposed to like ramp up our capabilities to create like artificial versions of living organisms. I mean, I'm speaking way above my pay grade right here, but everybody was freaking out about it, saying that this is a potential breakthrough in biotechnology, as it does a much better job of actually predicting the outcomes of these proteins folding than beforehand, and apparently that makes it a lot easier to like treat healthcare patients or something. I really don't know. Somebody smarter than me, please let me know in the comments down below. But for now, let me go ahead and start talking about something I actually know about. So let's go ahead and get into global interest rates. It is time for somebody to come and fucking hold me back, because I am absolutely ripshit about the U.S. Federal Reserve's interest rate hikes, and most importantly, the lack thereof of interest rate cuts. And so is Mexico, Brazil, pretty much every other country in the world is very upset about it as well, and let's get into exactly why. So, it certainly can be hard to be the best. Personally, I have no idea what it's like to be the best at anything, but the United States certainly does. They are easily the best at economics. I mean, just look at our GDP per capita. Fucking Luxembourg can go fuck themselves. But either way, when we talk about the global interest rate environment, it really is all the U.S. It's the U.S. or nothing at this point. There is no global central bank or global, controller of money, although the IMF is probably going to become that at some point down the line. For now, the closest thing that we have is the U.S. Federal Reserve, as close as it gets to a global central bank. Given that we issue the global reserve currency, it's really not that far of a stretch. But if we go ahead and take a look at some of the largest economies in the world, which I have included in our chart here in the piece, we are talking about exactly what current interest rate levels are for these countries and exactly what the last movement was. Was it up? Was it lower? How much was it by? Blah, blah, blah. So as we can see, the majority of Western kind of developed countries, quote unquote developed countries, are still raising interest rates, or at least that was their last move that they did, if they moved interest rates at all. Most of these central banks haven't moved in at least 6 months to a year or so, but the ones that have been cutting, and specifically that includes names like Switzerland, Sweden, Mexico, Brazil, China, all cutting over the past couple of weeks. It's a very interesting dynamic to see, because really, especially over almost the last decade at this point, but really over the past 8 years or so, they have moved in near lockstep with the Federal Reserve. The Fed raises, everybody else raises. The Fed cuts, everybody else cuts. And that's because you want to stay on some kind of interest rate parity with the global central bank, or, the central bank behind the global reserve currency. A lot of this comes down to foreign exchange rates and currency pair valuations, because when interest rates are rising in one country, like, for example, or the example that we use in the piece, is that when interest rates are rising in the United States, and say they are rising by less, or just not rising by to a similar magnitude over in Japan or somewhere else. Japan was the example that we use in the piece, but what that's going to do is make the US dollar appreciate wildly in terms of Japanese yen, because if investors can go ahead and buy U.S. treasuries and earn about 5% on their money completely risk-free, versus buying the equivalent of Japanese treasuries and earn 1 basis point, 2 basis points, basically, is what they're kind of trading at right now, or 10 to 20 basis points, I guess it really is. If you can invest in the U.S. completely risk-free at 5%, obviously global investors are going to pour their money into the United States and pull it all out of Japan. And so that is going to drastically increase the value of U.S. dollars in terms of Japanese yen. And so, it's not like a huge problem on the surface, but when you're an export-driven economy, like much of Europe is and like much of the developing world is, because everybody loves selling their shit to the United States. Have you ever heard of fucking Toyota? Then it becomes a little bit concerning, because if your GDP is that intrinsically linked to exports, then you were at the exact same time in that, by nature, you're also going to be very linked to your forex rates to the global reserve currency. So when the US dollar is appreciating wildly against the Japanese yen, that means the yen has lost a ton of its purchasing power. When they're trying to convert dollars back into yen, it's going to be way less yen. So at the end of the day, it's a lot less purchasing power going into countries like Japan and all of these other very export-driven economies. Now, in the piece, the biggest ones are names like Switzerland, the entirety of the EU, Sweden, Mexico, Canada, the UK even. These are very export-driven economies, and because the US is raising interest rates so much, and all these different central banks around the world are much closer to actually cutting than the United States is, unless you're the Bank of England, as they made very clear in their announcement here today, then it becomes a little bit concerning, because the US dollar could continue to appreciate against these other currency pairs, and that would lead to a lot of interesting dynamics that we haven't seen in the past couple of years. Maybe companies would stop selling to the United States, but if the demand is there, if they're willing to pay the right price, they'll of course keep selling, but it's just going to be a tough situation. Now, it gets a little bit more difficult when we factor in things like inflation and GDP growth rate, but we're not writing a book here. We're writing a newsletter. So maybe this is all stuff that we can break down going forward a little bit more clearly. If that's something you guys would want to see, we can talk about these full dynamics, but it's not going to be exhaustive or really satisfactory to anybody that knows what GDP stands for, to be quite honest with you. Now, the big takeaway here is that, one, there is a divergence in global interest rate policy, which is, again, something that is relatively unique, especially over the last decade or so. Second, this is becoming a big problem for export-driven developing economies like Mexico, like Brazil, like Russia, Canada. Well, Canada's not a developing economy. I mean, Canada at this point is basically a failed society. I mean, Jesus fucking Christ. But still, it's countries like that that are going to be completely screwed over, especially Canada, because their biggest trading partner is the United States. So the Canadian dollar is going to be losing its purchasing power against USD. Once again, completely fucked, but it's Canada. So they're used to being completely fucked, to be quite honest with you. I mean, you know what they say about big economies, you know, it means we have the ability to completely fuck over everything. See 2008 to about 2010 period. And the U.S. is definitely, it's not pursuing a similar course, but it's kind of affecting the same change where they are, our own interest rate policy is basically supercharging us. It's kind of like shooting steroids into the ass of somebody who's already 495 pounds of pure muscle. It's like they don't need it at all, but we do need it for our own circumstances here domestically, but on the international stage, it kind of screws over everybody else. Very tough situation. This is why nobody wants 𝗪𝗪𝗪's job besides 𝗪𝗪𝗪 and other presumably power-hungry and fucking prestige-hungry politicians like him and whoever the fuck else is working at Carlyle Group these days. Anyway, that about does it for the interest rate story of the day. Let's go ahead and get into some of the big stock movers. So, we have Warby Parker. Fuck, I meant to put on my glasses before this. Guys, believe it or not, I'm actually not as much of a perfect genetic specimen as I see on here. I'm actually wearing contact lenses right now, but my glasses are from Warby Parker. And this company, they make more nerds than just about any other company in the entire world besides maybe like MIT or something like that. But simply just by giving people glasses automatically gives them some of the best birth control that anybody could ask for. So, you know, obviously we're going to go wear contacts, but I meant to put on my glasses before talking about this so I could demo their products live for you guys, because we're all about keeping it as real as possible. But this company, it doesn't seem like they need our help in terms of keeping it real. They were up 18% on the day because of a very solid earnings report all the way around. Really, there wasn't any major black spots in this report whatsoever. I mean, sales grew 16.3%. That was the fastest growth that they've seen since 2021. So this is an interesting, like, DTC consumer brand that's actually starting to see a sales uptick in the post-pandemic period. We kind of talked about this yesterday, right? The post-pandemic period was when everything went online and we were all freaking out about, you know, like Peloton stock had shot through the moon and Allbirds thought that they were actually worth something at a certain point despite making great shoes. But Warby Parker is experiencing the exact opposite trend. Their business is actually doing a hell of a lot better than they were beforehand. They beat on sales of $200 million, gross margins expanded by 1.6%, and the firm is approaching profitability. They only lost 2 cents a share for the quarter. Expectations were for them to lose about 9 cents a share. So shout out to Warby Parker and helping me see that very clearly. You guys see what I did there? That's off the fucking dome right there, Abe. So, you know, you're welcome for that. I might go update that in the piece right there, because that's a genius fucking joke. Anyway, we're talking a lot about weed today. So we have Cronos Group right here. This is a mostly Canadian player. I mean, their biggest markets are Canada and Israel. I don't know if many people are smoking weed in Israel right now, but, you know, certainly hope that everybody's doing okay over there in that part of the world. We don't want to get into the politics of it. Go to Colombia if that's what you want to talk about, quite honestly. Now, Cronos Group, they are very used to seeing their share price completely and utterly collapse. The stock is still down about 85%, despite the fact that it rose 10.5% on the day yesterday, and a lot of that growth was from their own earnings report as well. So $25.29 million in sales, yes, million, not 100 million or anything, versus 23.8 million expected. They beat by like 2 million. For most companies, it's absolutely meaningless. For this company, it's like 10% of their earnings. So it was actually or of their sales. It was actually a pretty big deal. Shares are up almost 40% year to date, mostly due to the reclassification that we're going to talk about in a quick minute. So before I step on our content like I love to do, let's go ahead and talk about Roblox here. Now, we know that the U.S. economy is doing pretty well, especially compared to every other economy in the entire world, but it seems like children are in an absolute economic depression right now. I don't know if allowances are drying up or what the hell is going on, but nobody is spending money on Roblox anymore. And we can see that because the stock fell an enormous 22.1% on the day. That means because of this earnings report, the market decided that Roblox is the present value of all free cash flow that Roblox is going to receive for the rest of its life as a corporation is worth about, it is worth 1/5 or 1/4 less than it was yesterday. So that's an absolutely insane sell-off, but when we actually dive into the earnings report, we can start to understand exactly why and what's going on here. The real downbeat part of it was guidance. So they're actually projecting a sales decline going into Q2 this year. That's a sequential sales decline compared to Q1 and also an annual sales decline compared to Q2 of 2023. Nonetheless, that's what they said. Now, they did manage to lose less money than they were expected to do so, and they beat by a very slight margin on the top line. Nothing to get too excited about. RIP to the kids out there. About 60% of this company's users are under the age of 16, whereas about 83% are under the age of 25. So, very interesting company right here. Children in an economic depression. Go ahead and send some money to your kids, especially if you're my mom or dad and you're watching this right now. Alright, now before I start begging everybody for money, let's talk about Airbnb, because this stock fell a very, very nice 6.9% on the day, although it wasn't nice at all for the alpha portfolio. Like I said, guys, that's the whole fucking reason that we're underperforming the NASDAQ and the S&P 500. It makes me want to cry myself to sleep and know that is not a joke. So, this company, Airbnb, they're very used to fleecing customers with, like, hidden fees and, like, you know, a host will text you after you clean up the place decently, you pay a $250 cleaning fee, and they still hit you up afterwards, and they're like, oh, what the fuck, oh my god, looks like a frat party came through here. That's exactly what a host texted me and my friends when we were at a football game in Notre Dame one time. Charged us a $250 cleaning fee, and then had the audacity to get upset that we didn't, like, fucking wipe down the floors with our bare hands. Like, Jesus Christ, how much do these people want? Anyway, they're very used to fleecing customers, but they're not too used to fleecing shareholders. However, that's exactly what shares did on the day yesterday, like we said, falling a very nice 6.9%. This was, once again, mostly due to weak guidance. I mean, they had very solid numbers coming in for Q1, but markets were very focused on the Q2 revenue guidance. So, they said that they were going to earn about $2.68 to $2.74 billion in Q2. The market was hoping that $2.74 billion would be the midpoint of that range instead of the high end. So the stock fell about 7% in the aftermath. But the numbers for the current quarter were still pretty good. They beat by 70.8% on the bottom line, which again is pretty gameable because it's a per share metric, but still, we absolutely love to see it. The travel boom typically comes in, you know, late Q2 and especially in Q3, so this is usually a very good quarter for Airbnb. Could be a good time to buy in. Maybe we'll do a little bit of an earnings breakdown video on that. If that's something you guys want to see, let us know down below. Finally, let's get into some weed news of the day. This is what everybody's been waiting for. We are talking about Cannabis. Get some cannabis. I mean, I was so proud of this. I even said the other headline name that I had right there, which was, you know, we could have come in here and said we'd love some weed, but without the profanity, it just doesn't do it for me, to be quite honest with you guys. Now, lots been going on in the area of cannabis here in the United States recently. Actually, more that's gone on in the past 50 years or so, because back in 1971 was when the Controlled Substance Act actually became law here in the United States. Congress enacted this. It was approved by the president, basically gave a shit ton of power. Quite honestly, I think formed the Drug Enforcement Agency. So this is the single biggest change that's happened since then. On April 30th of this year, keep in mind that's 10 days after 420, the annual weed holiday, the U.S. Drug Enforcement Agency had announced plans to move, to basically petition to reschedule cannabis as a Schedule 3 drug instead of a Schedule 1 drug. For those of you that aren't fortunate enough to live here in the greatest country in the world, in the United States, what I should let you know is that our laws are completely fucked. They don't make a lot of sense sometimes, and especially when it comes to drug regulation. So, excuse me, what we do here is we have a scheduling system. So, it goes 1 through 5, and drugs that are considered Schedule 1, these are the worst of the worst. Think heroin, think fentanyl, think LSD, think drugs that have, they basically have a very high probability of abuse with very little to no actually medical use cases. Whereas drugs that are in the Schedule 5 territory, this is like, it's literally nothing. It's like shit that you could go buy like off the counter at a CVS, basically. So there's really no difference at all. But the other important one to know about is going to be Schedule 3. So it basically goes in order of extremity, 1 being the absolute worst and the most addictive, kind of most prevalent for abuse, whereas 5 is like pretty chill, like you could give it to your kid and they're probably going to live. But Schedule 3 is right in the middle of the road. So this is drugs like ketamine, Elon Musk's favorite, Tylenol with codeine, which I'm pretty sure is Sprite, but I'm not, or not Sprite, is lean. Somebody's going to have to check on that because I'm not a rapper, so I'm not too familiar. But it's basically Tylenol with codeine, aka lean, ketamine, steroids, testosterone, and now cannabis as well. So this all started when the HHS, the Health and Human Services of the DHS, basically recommended this to the DEA that they should consider rescheduling marijuana as a Schedule 3 narcotic. Now, this doesn't really do a whole lot to change regulation and enforcement here in the United States, because even Schedule 3 drugs, they are heavily regulated. It's not something that you can just go out and get very easily unless you happen to know a guy, which if you do, let me know. But it's still something that's very punishable if you're caught with it and it's not kind of all kosher. So what I did here was I asked ChatGPT to explain to me exactly what the difference in punishment and in regulation overall would be for a company that was selling a Schedule 1 versus a Schedule 3 drug. And I laid it all out right here. Like, for example, if you are a third-time offender possessing a Schedule 1 drug, you can go up to jail for 5 years, whereas if it's Schedule 3, it is much, much less. It's up to 2-year imprisonment, for example. But it really gets interesting when we talk about trafficking stuff. Like, Schedule 1 drugs, they are absolute worst. This is the kind of shit that Kamala Harris will put you away for, and she did put away, well, she tried almost 2,000 people for smoking marijuana or simply possessing marijuana, put away hundreds of them in prison, and now is apparently completely changing her mind. It is no coincidence at all that this is happening in an election year where President Biden is currently not leading in the polls, not leading in every poll, I should say. What I should say is that he's not clearly leading in every poll, because I don't want anybody from either end of the political spectrum to come after me. Don't want you guys to know what my politics are whatsoever, but it's very interesting timing to be doing something like this. Obviously, the president tapped somebody on the shoulder and said, how can we get more votes from young people? And this was, probably the number one way to do so. Now, the important thing to note from a company's perspective is there's basically 4 big things that we want to be able to look out for. With marijuana moving to a Schedule 3 drug, first and foremost, it becomes much more freely available to research and do actual controlled studies on. So, historically, this, you have to go and buy pot from the DEA in order to be able to do research on it. That sounds like the fucking most loser, backwards, bizarro world thing I've ever heard in my entire life. But without having to do that, now there's going to be much more opportunity to actually study the effects that this stuff has on people so that we can know what the fuck we're talking about when we're talking about using it and smoking it, especially when every 16-year-old in the country has tried the drug. Next, the second thing to consider is there's likely going to be less black market competition as a result of this. If this shit becomes more freely available and is price competitive with that of the black market, which it is in my home state of Massachusetts when I go up there, I should have told my mom to stop watching this quite a long time ago, but, whatever, we're into it now. So, these are kind of the big things that, those are the 2 big things that we're going to be looking for. There's less competition, more freely available to research, so we can know what we're talking about and actually create better products. Third big thing is that they are actually going to be able to bank with national banks instead of weird-ass, sketchy, bullshit, credit union type of stuff that they've been doing in the past so far. They'll have actual access to capital from here on out. Finally, this will be a decreased stigma around weed use, especially for older generations. It's still kind of the vibe with old people. Go ask my dad that weed is for hippie losers, kind of people that don't really do anything. But seeing that the U.S. government is starting to think that it's a little bit less of that much of a problem, especially if President Trump comes into office, the stigma is going to be almost entirely gone. I think Trump should pull an Elon and go onto the Joe Rogan podcast and smoke some weed with him. That's how you win an election here in the United States, quite honestly. I am not a campaign manager. I'm completely apolitical, but that would be my recommendation. The 5th big thing is the ability for these companies to actually be able to deduct expenses from their taxes. Historically, because they sell a Schedule 1 narcotic, they haven't been able to deduct expenses. They will be able to do so going forward, now that it is a much less kind of severe crime to be selling weed. So, because of the lack of ability to deduct expenses against this stuff, most weed companies in the United States face an effective tax rate of like 65, 70% sometimes. So now that they'll be able to deduct random bullshit just like every other company lies about in the United States as well, they'll be able to lie about the exact same stuff and probably become a lot more profitable. 2025 could very well be the year of profitability for the cannabis sector. That doesn't mean you should go ahead and pour into every stock in the sector. However, the next WSO Alpha research report is actually going to be on a cannabis stock, a Canadian cannabis stock. So stay tuned for that. And let me tell you, it's very tough to have a solid or kind of strong opinion on how shares are going to do going into the future. But I included a piece or a little chart in here that shows exactly what kind of the legislation is on a state-by-state basis in the United States, because although cannabis is moving to the Schedule 3 level, really doesn't change anything about the regulatory environment on the ground level, or like for these dispensaries, because that is still going to be determined by the states. And these states that haven't gone on board yet, it's not like they're going to suddenly change their minds anytime soon, especially those of which haven't made any changes since, Colorado did back in like 2009 or 2012 or something like that. But effectively, it is still fully illegal in Idaho, Wyoming, Kansas, and South Carolina, and I'm pretty sure all 12 people who live in those 4 states probably couldn't care too much less about it. But then we go ahead and one step lower where only CBD is legal, and this is states like Texas, like Georgia, Tennessee, Wisconsin, Iowa, Indiana, Kentucky. There are actually some cool people who live in those states. I mean, Texas is the second most populated state in the United States, and there's no market for legal cannabis, even on the medical side of things. That's really the big growth area for this industry here in the U.S. going forward. We'll see if they can actually figure it out. Like I said, stay tuned for our exact thoughts when we publish that piece. You know, the whole industry has been popping off since about August of last year. We see the advisor shares pure U.S. cannabis ETF is still down about 82% from its actual peak, which was way back in late 2021, early 2022. Now it is up about 90% from the lows seen in late summer of 2023. So, you know, it's a real turnaround year for the marijuana industry. We're very glad to see it. The vibes are high, just like I'm about to be. I hope my mom didn't hear that, and I certainly hope Patrick didn't hear that as well. But we did, of course, have to finish up with a quote from the king of smoking weed himself, Mr. Snoop D-O-double-G. Snoop Dogg, he once said, "If it's flipping hamburgers at McDonald's, be the best hamburger flipper in the world. Whatever it is you do, you have to master your craft." That is great advice for when I inevitably get fired after saying that I'm about to go get high. So I can go ahead and try my best to be the best hamburger flipper in the world. SpongeBob is going to be some very difficult competition, but maybe because he lives under the sea, they'll cut me a little bit of slack on being the best in the world. Anyway, guys, I've been yapping for over 26 minutes here. I think this is our longest one ever. Let us know what you think down below. Go ahead and make fun of me and all of our stock picks as well. Happy investing, happy trading. Always good to see you guys, and we will see you next week. Bye now.